What's going on, guys? Welcome. Today we're pretty much just going to go through the basics of what's and how I'm going to go turn $10 into financial freedom. If you guys are new, drop a subscribe, drop a like, comment down below, and go follow my Instagram and follow my TikTok as well. Both will be right here. But pretty much today we're going to go through how I'm going to turn this money into financial freedom. In this video, we're going to be going through a couple key points as to how I'm going to do it, why I'm going to do it, and the process, strategy, brokerage I'm going to be using, all of that. So if you guys do like this video, please drop a like, drop a subscribe. Pretty much the whole point of this is to show that everyone can do something that they want if they really put their mind to it. And basically, I have set my mind to the fact that I want to make financial freedom and live the life I want to. Because I mean, who doesn't want that? Who doesn't want to gain financial freedom so that they'd never have to work a 9-to-5 for the rest of their lives? In my opinion, it's not worth it. Working a 9-to-5 for the rest of your life if you don't enjoy it. If you enjoy it, then hey, that's on my place to say whether you enjoy it or not. However, this platform is going to be pretty much based on traders who are willing to take the risk, take the chance to potentially make that financial freedom that they've always wanted. Wanting to retire their parents, wanting to buy fast cars that they want, living wherever they want, just being able to do whatever they want, whenever they want. Because that's pretty much what I've been trying to do for the last 2 years of my trading. Like, key things you need to understand is during this process is I will probably blow the account a couple times. I will probably not be able to turn $10 into $100 within the first week. But the whole thing of this challenge is to hold myself accountable and show you guys how exactly I'm going to do it. Later on, when I grow bigger, I will start live streaming, live trading with you guys so that you guys can take the same trades I'm going to. A couple key things is that the foreign exchange market is extremely risky. It's not for those who are scared of losing money. It's not for those who are gambling their last little bit of money they have. It's not going to be a get rich quick scheme, and you're not going to get rich like this. It's a process that everyone who wants to trade needs to go through. Everyone will go through a loss. Everyone will go through a period of where they'll make so much money. They're going to become cocky and they're going to become like, oh, I made a set amount of yesterday. Let's try double it today. Now, everyone's going to want to do that. Everyone is going to want to overachieve, and everyone's going to want to try prove something to themselves, saying, oh, I started trading 2 weeks ago. I made my first $50 today. Tomorrow I'm going to go for $100 or $200. I can promise you now, you will blow your account and you will get humbled by the markets, because the markets don't want you to make money. The markets don't. They don't want you to create this financial freedom. So if you don't know how to trade, you're not going to be able to make the money that you want. So that's why I'm pretty much here to show you that it's not difficult. It's just you need to try and redo it and constantly hold yourself accountable. Show the discipline, show the dedication, show the willingness to learn something that could potentially make you so much money or make you lose so much money. It all depends on how you choose to treat trading, whether you want to treat it as a side hustle or as a main source of income. Because those two separate things can either show that you're going to make it or break it. If you don't put your whole heart and whole dedication into trading, I can promise you now where you want to be in the next couple of years. You will be probably a little bit in a better situation because you will have earned a little bit more than what you wanted to. But if you put your whole heart, your whole dedication into making that full financial freedom that you want, you will have to put all your time, all your dedication, willingness into trading. And it's not going to be quick. It's going to take months to years, depending on how you treat it, whether you treat it as something like a 9-to-5. If you treat trading like a 9-to-5, where you study the markets from market open to market close, if you treat it like that and you analyze and you study and you journal how the markets move, you will achieve what you want quicker than someone who will treat the markets as, oh, let me just do it 2 hours a day. Let me do it an hour, 2 hours a day. Let me just look at the markets. Let me just prove that I know how to trade. Then I'll get off and I'll go lie in bed. Or you need to treat it how you want, and you need to have the dedication to do it. But okay, let's get into the video. So the first thing I want to speak about is a brokerage. A brokerage is incredibly important to start this whole journey. You want to have a brokerage be able to allow you to achieve what you want. So I have 2 brokers in mind. The first one is Exness. Now, my reasonings is because Exness can provide you with a 0 spread account. Exness offers you 0 spreads. They also offer you a minimum deposit on your account from $10, which is exactly where I want to start. I want to start with $10 to show you guys that it is possible to go from $10 to a lot. The last thing why I want to go for Exness is because it has unlimited leverage. Leverage is pretty much, in layman's terms, that you have $10 in your account balance, but you'll be able to trade pretty much like $1 million. You'll trade as if you have $1 million in your account balance. So let's say you go from a 1 to 1,000 leverage and you have $10. You can trade as if you have $100,000 in your account. So that's pretty much leverage. I'm going to use Exness for the first portion of this journey to turn the $10 into, I want to achieve from Exness 10 to either $500 or $1,000. Now keep in mind, I'm speaking about USD. I'm going to be turning $10, 500 to 1,000. So that's pretty much the first portion why I'm going to use Exness. The second broker is a classic South African broker who I love and I trust, because that's what made me earn at least 20,000 Rand throughout my whole trading journey. 20,000 Rand is around $1,100. That's my total gains that I've made through trading. However, the last couple months I've been practicing my strategy. I've been practicing trading all leading up to this moment, which is now. So the second broker I'm going to be using is XM. Why? Not only do they supply you with a 100% deposit bonus, so let's say you deposit $100, they'll give you $100 in credit. So you'll have an account balance of $200. You can't withdraw that, but it'll allow you to trade bigger and gain more. So from there, I'll be switching over to XM, where I'll be depositing all that I made in Exness into XM. To maximize my profits, I'm going to be using, in XM, I'm going to be using a 1 to 1,000 or a 1 to 500 leverage. Whereas in Exness, I was using a 1 to 1,000 unlimited. I'll be using a 1 to either 500 or 1,000. Just because I don't want to risk as much once I've gone to the broker I trust. Because risking $1,000 in a 1 to 1,000 leverage, it's very risky. Leverage is really risky. If you use anything above 500, it's very risky. So that's why I want to tone it down a bit once I reach that balance. But yeah, second thing I want to go through this video is my strategy. So we'll be pretty much just loading up markets, and I will mansplain the market to you guys for those who have no idea what trading is. If you guys are new and you don't understand what trading is, I would link you to a YouTuber down below. He will pretty much be able to explain everything about trading. The strategy I use is actually from him, so I'll link him down below. However, my strategy that I've implemented also has a couple added things, and I mix swing trading with sculpting. Okay, so as you can see on the screen, I've loaded up TradingView, which is the #1 app I suggest everyone gets when starting to trade. TradingView. I'll also be using MetaTrader 5 as my trading platform, where I enter and exit trades. So if we look on here, the pair is CAD JPY. We can see on the daily time frame we're in a bullish movement, because we can see here higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low, lower high, lower low. Now at this bottom point, we can see that we reversed, because what I like to call bullish engulfing. So you can see here, I'm going to just get the circle. At this bottom point right here, we can see we had a massive candlestick, which was bearish. Then on the next day, we had a huge retracement of this area of interest. So now this purple rectangle is the area of interest that we have, the daily area of interest. Then we surpassed it. So this is a bit of confirmation. However, I wouldn't enter my trade there just yet. I know I did, but I wouldn't enter it again. We retrace back up there. To enter a trade, I would wait for it to enter the area of interest again, then give me confirmation like this bullish engulfing candlestick right here. Then I would enter at the top here. So I would enter here, targeting the highs, stop loss just below there, giving us a 1 to 2.8 risk reward. So if we go down on a lower time frame like the 4 hour, we can see here on the 4 hour time frame that it's confirming again that we are in bullish movement. You can see here it is now changed. Market has shifted to a bearish movement because it caused a lower high. It's now stuck at this area here. So if we go back, we can see that there is a 4 hourly area of interest. Now, area of interests work like this. If an area in the market has been hit 3 times or more, it is a valid area of interest. So here is one hit. We go down here. We can see another hit, another hit. So this is a valid area of interest. So now to wait, if I wanted to enter this trade, I would wait for something like this. Either to carry on bullish trend, I would wait for something like this. Now keep in mind this is swing trading because this would go over a period of days, not hours, but I'll get into sculpting or day trading later in the video. It's pretty much the same thing. However, instead of looking at higher time frames, you look at lower time frames, but the strategy stays the exact same. So I'd wait for something like this, either a break, retest that area to go back up to upside, but I'd wait for either a morning star or a bullish engulfing. Or if I wanted to sell this market, I would wait for a break, retest, and the same thing, however, I'd wait for an evening star or bearish engulfing. Then I would enter this trade, targeting on the daily time frame. I'll target something like this. However, this is a very risky trade because it's a counter trend trade. So I'd enter, let's say here, stop loss just above the previous high, wanting a 1 to 2. So I'd go here. That's what I would do if this trade would have sold. However, to see where the market could potentially reverse again, we can get an area of interest. So we can look back and see if there's any area of interests that comply with where I want the market to go. So we can see here, there was a bit of a rejection here. So we can see if anything touches here. Now, area of interests can go back from a maximum of 3 years. So anything more than 3 years isn't a valid area of interest. Let's just make this go a bit bigger. So we can see here, this is a valid area of interest because we have a 1 tap, we have a 2 tap, and we have a 3 tap. So I would wait for market to retrace back down to this area of interest. Now it could potentially reverse. The market could potentially full on reverse and continue to sell if we break this, retest it, then continue down. Then I would hold my position and go down to this area of interest here. This one here, this purple. Because there's also an area of interest here. However, I think price would go down and retest this main area of interest down here. So pretty much my strategy is, if you want to buy, you want to look for higher highs and higher lows. But if you want to sell, you want to look for higher lows and lower highs. And always you want to follow the trend of the market. You never want to trade against the trend, because there you could lose. So like this sell here, if it breaks this area of interest, retests it, then I would potentially be interested in selling the market. However, it is very risky. So that's where risk management comes in play. You always want to go for a 1 to 2 or a 1 to 3 risk reward ratio. If you really feel risky, you don't want to, you can hold it. However, there could always be chances of retracement. So if we look at this market again, we can see that this would be a 1 to 5. So when you have an account balance, let's say of $10, I would be risking a lot, because you want to make that $10 into a bigger amount. So to do that, you can't swing trade on a low account balance, because there you will lose a lot and you will blow your accounts. So that's why I'd go down to the 15-minute time frame. Let's just close all of this. So we can see that the 15-minute is in a bullish. Yep. Higher high, higher low, higher high, higher high, higher low, higher high. It's currently creating a bullish movement. However, to enter a trade, I want at least 2 consistent time frames being in a bullish movement. So we can see here that 30 minutes is also in a bullish movement. So this trade is viable. However, there is an area of interest right here. We can see here that there's an area of interest right here. So I would wait for price to retrace back down to this area here and then buy. Targeting the highs, stop loss just below the low, and this is what I would do. So even though the market's still going up, I want the market to go back down, retest that area of interest, because it always needs to create a higher high, then a higher low. So you want to wait for that higher low to finish and then give you a confirmation like a bullish engulfing or a Morningstar movement. So then I would wait for this market to go back, retest that area of interest, give me the signal, then I would enter the trade. And it's always, like I said, a 1 to 2 or 1 to 3 risk reward ratio. So depending on where this market retests and give me the signal, I could be targeting here and having market like that or whatever. So that is my strategy. I'll go more in detail on a different time frame. So let's go to XAU USD. I don't normally often trade gold. However, we can see that it is on the daily. We can see it wants to create a higher high. Because again, this is in a bearish movement. Higher high. There we go. Break of structure. Higher low. So it wants to create a higher high. However, again, you need areas of interest, such as this, because you want a 1 tap, 2 tap, 3 tap. So a valid area of interest. So I'd wait for price to retest this area, and then so like down. So I'd go wait for this to close there to go up, because you always want the retest, then the confirmation, then to go up. However, if we go to the lower time frame, just want to get rid of these things. So if we go down to the 15 minutes, we can see that it is currently in a bullish. Again, 30-minute, 2 consecutive time frames, bearish. However, I like to trade gold on the 5 minutes, but you can also see here, it's had a break of structure, probably wanting to retest this fair value gap. So I expect price to either go through here, reject this fair value gap, then create a lower low, or the complete opposite, have massive movement up, retest it to go up. So this is where confirmation and trend comes in play, because you never want to go against the trend unless you are 100% confident that the trend is going to reverse. So, but if we can see here, on the more reliable time frame, like the 15 minutes, we can see it has not broken this lower low. It's not. We can actually see here, the New York had a massive push up. So the market actually looks like this, down. So what could potentially happen is it wants to retest this fair value gap here. So I would be probably interested in a sell. But this is if I'm very confident that price is going to go down. If it rejects that area of interest, this fair value gap here, then I would probably sell this market. However, I will not be trading today. I'll start trading next week again. So this is pretty much how my strategy works. However, during the videos of when I trade that I'll be uploading to my YouTube channel, you will see my strategy being put in place. Yeah, I'm going to try lead for complete transparency in this whole challenge. Throughout everything, I want complete and utter transparency. That sums up this video. That sums up how I'm going to be doing this, why I'm going to be doing this, and just the strategy and the broker I'm going to be using to achieve this. Through transparency, I want to show you guys every single trade I take, why I took it, how I took it, the risk I was doing, all of that I want to show whilst trading. To prove to you guys, I want complete and utter transparency. Not to give you guys false hope that I'm depositing more into my account to show that I'm winning, or when I lose, deposit more to show that I didn't lose. I want to show everything, my losses, my wins, everything, and if I blow the account, I'll show it to you guys. And again, I will probably blow the account. Not only once, but probably multiple times. Because it doesn't mean I'm a bad trader, it just means that the market didn't play in my favor, whether I was right or wrong in the trade. Losing is a part of the process. You can still be a good trader, a brilliant trader, but you'll still lose. Just because of how the markets move, it doesn't mean you're bad. It doesn't mean you don't know what you're doing. You just need to predict it correctly. But losing is inevitable. You will probably lose, and you'll probably blow your account. That's where the third thing I want to come into this video. If you guys want to join this journey of mine, I suggest getting a prop firm. Getting funded through prop firms. My biggest suggestion is Funded Next. They offer possibly the best accounts for the most reasonable amount of money. They will pretty much give you a capital that you cannot withdraw. It's not yours, but you need to pass an evaluation phase. So you need to prove to the company that you are able to trade. So they'll give you 2 phases normally. First phase will normally either be 8 to 10% of the account balance. So let's say you have a $10,000 account, which will normally cost you around $100 to $150. You will have to earn 8 to 10%, which will be either $800 or $1,000. So that will be the range. Second phase is normally 5 to 6%. So then again, you'll either have to earn $500 or $600 to pass your both evaluations, and then you'll get funded. However, they'll have drawdown, so you cannot lose normally 10% ever, or you will fail your evaluation and you'll have to buy another funded account, and then have to do the whole process again of having to pass evaluations. They also have daily drawdown, where you'll normally like 3%, so it'll be, let's say, $300 that you cannot go down in during one day, and the next day then it restarts, where you cannot lose 3%. So my biggest suggestion, if you want to go to the Propfirm route, is Funded Next. They are the most reliable, obviously, besides for FTMO. However, they are relatively expensive and they don't give as many options as Funded Next does. So I'm super stoked and I'm super excited to go through this journey with you guys, and I hope you guys did enjoy this video. I'll probably post next week Sunday, because I'll probably start trading next week, and then I'll probably post next week Sunday. So if you guys do want to see that, like, subscribe, and stay tuned for the next one. Goodbye.